Today I am speaking with Yuresh Maharaj, CEO, Insurance and Asset Management at the Standard Bank Group. We will be exploring Liberty's journey as part of Standard Bank, the convergence of banking and insurance, and what these shifts mean for advisors and their clients. Welcome, Yuresh.
Oh, well, thanks for having me. It's great to be here.
Pleasure. So I think let's set the scene with a short intro into the Liberty Standard Bank journey, maybe a bit about the changes, why, and your perspective on the integration of Liberty within the bank.
I'll start off with, I think both brands or organizations have a long history over several decades. And one which was for I think almost 20 or 30 years was actually managed through a bank assurance relationship. And sort of as the changing needs and environment changed, Standard Bank, which was the majority shareholder of Liberty, saw the opportunity to provide a holistic financial offering. And none better than to actually 100% own a large life insurance asset management group like Liberty. And as they say quite easily, the rest is history, because where we find ourselves 3 years later, it's 3 years since the deal was concluded. So we 100% held as the Liberty Group by the Standard Bank Group. And I think you've referenced the point around our journey over the last 3 years has definitely been around, what's the rightful place for a large life insurer, as well as asset management entity as part of a wider Standard Bank Group. And we were busy with that integration, which I'm very happy to say it's quite a mighty task.
I'm sure.
And one which we've completed within sort of, I would say, 24 months of the deal conclusion. And so we found our place, and effectively the Liberty entity is now born in the 4th business unit of Standard Bank Group, which I have the pleasure of leading Liberty as well as the 4th business unit. And hence now it's about how do we actually maximize the opportunity, having a wide spectrum of capabilities.
Was there a lot of, was the cultures very different within the two?
Yes, I would say yes. I think this, the Standard Bank Group is predominantly a banking group. The banking environment and expertise, talent has a certain drive and culture, which I would say there are similarities, but equally there's some nuances and differences between a life insurance and a savings and investment type of organization. As I say, there has always been a connection between the two brands, but not sort of fully immersed and entrenched. And I would say there was learnings and good learnings and recommendations across both organizations, where we find ourselves now, as I say, 3 years post the journey. But I would say a much more broader culture for both organizations. It was great to see that the Liberty influence in the Standard Bank Group, and equally vice versa.
Right. Wow. Yeah. So combining it and creating a whole new culture, not favoring one specific one. Liberty has a proud history in the South African insurance market. How has its legacy shaped its role within Standard Bank, and how do you see the evolution now as part of that larger financial services ecosystem?
I think Liberty has, as I say, a large or a long history and legacy, particularly in the South African market, and try to extend that into the Africa market. I think the complement of the strong brand presence of Liberty, particularly in the South African retail affluent market or middle to affluent market, complements the offerings that the Standard Bank has. And at the sort of similar symbiotic relationship, Standard Bank has a presence in 19 countries across Africa. And so it has a very distinct Stanbic brand presence across Central, East, and West Africa. And so there's a leverage point for the Liberty or the insurance and asset management offering to actually propel now into those markets. So you could see sort of the opportunities both in our local market as well as continent.
Absolutely huge opportunities. Yeah, that's very exciting. The accelerating convergence of insurance and other financial services has become a significant trend. From your perspective, what does this convergence mean in practical terms, and what do you see as the biggest impacts, both positive and negative, for advisors and their clients?
I would sort of first race to the positives,
Yeah.
because I think consolidation in the industry is great.
Yeah.
And I'll start off with the client. And sometimes we often forget that. I think if we look at what is the evolving client need out there, a client wants seamless service, wants excellent advice, and wants trust and integrity of whom they're interacting with as a brand, organization, or a distribution force. And so having this holistic, comprehensive offering, I think, is what meets the client's needs, evolving needs today, and particularly a retail client. And so this convergence that we see, I think, is actually being fueled by a client need, as opposed to organizations trying to sort of look at what's the best fit. And we've seen this globally, particularly in Europe, this convergence. And obviously that in recent times, over the last 5 or 6 years, we see that there's many in our South African market where we see this convergence. Life insurers getting banking license and vice versa, where banks are getting much more integrated offerings with extending into insurance licenses. So I see that convergence has come through by the client need. If I take that to our advisory for financial advisors in general, I think it gives them a great opportunity to entrench the relationships and the network effect that they already have with clients, because I think it's the trust that they build up with their clientele over several years, able to offer them now something much wider than this insurance, asset management, or banking. Putting it all together is a powerful package. And so I think there is a great positive for distribution networks, financial advisors within these large financial conglomerates now that are emerging, which is great for the client, and I think it's great for the financial advisor.
Yeah, I think when a client trusts an advisor, they really want to deal with them with everything, and don't operate as different advisors. And once you find that magic advisor that you can trust, you stick with that person. So.
But I think if you don't mind, just to add, and not a positive, but it's more an emphasis, I think, for the advisory force is, and as we sort of look at the sort of different personas of clients and their needs, and particularly sort of referencing middle market and sort of going up to affluent or high net worth, obviously needs change. Yeah. And within that context, it's very, very important that, and what I refer to it, and we use that in our organization, what's our guided advice methodology? It's critical that you have proper advice vetting processes to simplify for clients, and equally equip the advisory force with the right tools that they need. Advisors don't need to be asset managers. They need to provide holistic advice, but have the core capabilities within this comprehensive offering. So there is a go-to asset manager or a platform that they require that clients want to actually engage on, or the comprehensive risk offerings that clients are looking for.
The integration of insurance and banking services being driven by technology. Yeah. How is Standard Bank leveraging these innovations to create seamless solutions for, obviously, advisors and clients? Tech is the thing and makes our lives easier, and it will never replace us. But how have you done that?
So we are on a journey, and I think like most financial services groups are, as part, and I think that's one of the benefits of the integration. Now deeply entrenched in the Standard Bank group, there's 3 large global tech players that the group has a long-standing relationship with now over sort of the last 5 to 7 years. And that is Microsoft Azure, you've got AWS as well as large cloud-based suppliers, and Salesforce as an active CRM, but onboarding and sort of client analytics tool. So we've partnered with them. We've sort of, I would say, halfway through our journey as the insurance asset management unit of leveraging these capabilities. Again, it comes back to the point I made earlier. How do we actually, I always use this cliche, how do we make our financial advisory force rock stars so that they can do what they do best in terms of giving best advice, whereas all the other administration burden becomes seamless, and you have the right tools to select the right offerings and so forth that's enabled by our tech transformation.
Yeah, because I think that has really become a big big thing in the advisor space is the admin burden. If you can lighten that admin burden for them, makes their journey also so much easier with their clients, right?
Exactly. And I think it's a key recognition that we operate in a highly regulated environment. And I think, one that we actually so proud of South Africa.
Absolutely.
Our financial stability and our financial reforms and regulations, but that comes with a burden and onus.
Absolutely.
And finding ways to get efficiency through that and sort of take that away from the financial advisory force is one of our key objectives.
That's great. How does Standard Bank's vision for comprehensive financial offerings redefine the role of Liberty? And what unique advantages does this bring to advisors working here?
So I'm very proud to be a member of the Standard Bank Group. I should start there. I think they have such an impactful purpose for the continent, and that is effectively Standard Bank Group fueling the growth of Africa. And so within that context, my contribution of Chief Executive of Insurance and Asset Management, we've got our objective within the group halo to say is how do we together grow and protect what matters for our clients? So in that context, the offerings that we do, I think it sort of sits under financial literacy and education to empower our clients to make the right decisions, broader than just banking, as I called out, in terms of the other disciplines. And that in itself, looking at the size of the Standard Bank Group and its continental reach, that particularly in the African continent, I think holds us in good stead. I think the other components to actually really live the purpose of the group as well as insurance and asset management is that there's some key ingredients and what I refer to as competitive advantages. We've got across the group, I think we've got the largest distribution capability through advisory force, be it in the continent, be it in South Africa, being with our banking relationship managers, putting all of that together. The tech transformation that I spoke about has been a long journey, and we've seen the benefits of that. And then the final point is we should never underestimate the brand trust. And the Standard Bank Group has been rated for several years one of the most powerful brands in the continent. The Liberty brand, as I said, anchored in the South African market, equally has grown over the last 3 years, I would say maybe coincidentally or not, post the transaction, but still within the top 30 brands and has grown in rankings over the last 3 years. So having that brand power and gravitas that can support the financial advisory community that supports us, I think it's a powerful, with the right solutions.
You touched on education as well, consumer education, and I think the focus on that has never been as big and as important as it is now. Is there a real focus also on your side with that?
I think that's one which the legacy of Liberty actually comes through. It's something which resonates with me very strongly, of that business as well as in the context of Standard Bank Group. And I'll sort of call out one example of recent. I think we've seen the waterfall moment of the two-pot system coming in place at sort of the third quarter of last year. What was so distinct in that, in our engagements with our clients, is that they didn't really know what this meant. There was an opportunity to get a bit of cash, and that's the way sort of the blue-collar worker, as a generalization, would see this. But understanding the ramifications of it, or the implication of this on a continuous basis, was something that we tried our best to actually engage in. And this, as an example, we've had sort of set up a lot of work sites for walk-in customers, for queries and so forth. And we made sure that we had our financial advisors to actually talk them through the process and understand the complication. It's just one minor example.
Yeah.
I think the opportunity for financial literacy, and particularly financial literacy and saving, and the opportunity to save is so powerful.
Yeah.
But that starts from the youth.
100%.
Because once that gets ingrained, either at sort of the secondary school level to tertiary, and then when you start the job environment, you understand the importance of it.
Yeah.
And that's a real powerful mission of Liberty as well as the Standard Bank.
Yeah. So it starts at school, but it also starts at home.
Yes.
Because we show our kids by example what it means to save, start saving early and having those regular conversations. And I think that's a role where the advisor also can play. Sure. When the kids see there's an advisor and there's someone coming in to the house to give advice, having an easy way to just extend that conversation to kids. It's always easy for us just to give the blame to someone else, but I think it's a lot of introspection there on the savings route. Here is as the financial services landscape evolves, what role do you see for advisors in balancing the efficiencies of digital platforms with the trust and personalization required in complex client relationships?
I think we find ourselves, the pace of the world has changed tremendously. I think clients, and I think with that comes an expectation for real-time delivery to clients.
Yeah.
And what I mean by that is localization versus offshoring versus a whole host of opportunities that presents itself in the world. And some of them manifested through digital platforms, social media. That expectation is there for the clients. And I think the key to unlock this is meeting those with a real-time expectation of clients. And I think you've called it out, which in simple terms for me is enable the technology to create the efficiency so that advisors can spend quality time with their clients, giving them the best possible advice. The mantra for me is, and I tell that to our advisory force when I have the opportunity, is that AI and robo advice is efficiency measures and opportunities, but can never replace the human-to-human engagement. It augments it, definitely does. It will never remove that because you can never build a rapport, a trust over several years with a robot or with the AI.
Yeah.
And I think that's the relevance and significance of great advice and a disciplined financial advice.
Well, I think trust and empathy, just two very critical things that we use and have to have in our industry, is something that we'll never be able to take out.
Yeah.
That's 100%. With change comes opportunities. What are you most excited about?
I think the one is now nestled and found our home as a business unit in the Standard Bank Group. Within that context and the sheer scale of the business gives us an opportunity to our client base on both sides. Firstly, the Liberty clients can get exposed to Standard Bank Group offerings, as well as the client base of Standard Bank, if you just look at the retail customer base, extends into sort of 7 to 8 million customers just in South Africa. That's a huge opportunity to make a connection, to build a relationship, and provide the best possible service with the offerings that we have. And I think it's a real competitive advantage. So that in itself is a great opportunity that we'd love to unlock, and we've done several initiatives already to unlock that opportunity for ourselves in the best interest of our clients. And then equally, as I touched on earlier, I think the opportunity to scale our propositions that we anchored in South Africa, particularly in East and West Africa, working in conjunction with the distribution capabilities of our in-country counterparts at Standard Bank Group, is great opportunity. And we've seen, again, some of the benefits of that we've just started seeing the opportunities emerge.
It's great. You've touched on tech, you touched on your role for advisors and how you help and guide them. Touched on convergence and the importance of educating our clients. Our audience is the advisors. Any words of wisdom to them?
So I think first and foremost is just, I personally would like to acknowledge financial advisors. I grew up in a household where my dad was a broker for 25 years.
So did you choose the career?
No, not
okay,
really.
damn. I thought there's a moment.
No, it kind of met at some point.
We want to change that narrative, right?
So I grew up around the dinner table of stories of empathy, stories of devastation, as well as gratitude.
Yeah.
And so I think the key for me is I never underestimate the effort that it does take to stand by a client in time of real need. And that's what our financial advisor community does. And I have full appreciation for that takes time, that takes effort, that takes dedication, and that takes resilience, because each year, and we're in the month of January, we start again for the year ahead. And as you mature, and I think definitely for the younger advisors who've now just entered the industry, it's really tough to break through, to build that network. My advice to the young advisor is, please ensure that you have a great mentoring program and a coach who can guide you through that. And for the older advisors, please give back to the financial advisory community. And I wish them all the best in their endeavors for 2025, never taken for granted. And without the financial advisory community, we won't have financial services on the continent.
Thank you for your time, Yuresh. It was lovely speaking to you, and all the best for this. Yeah.
Thank you very much. And again, thanks for having me and all the best as well.
That's absolutely